Hello, everybody. This is Paul McMillan II, and welcome to another live New York session. It is October 21st, 2024, and it is Monday. So I hope you guys had a good weekend. So let's see if we have any news for today, which we don't. So that's a good sign there. So that's good. So let's go ahead and get started here. Make sure I have my notes and everything in order. So we're going to be trading NAS100 today, and I'm going to be implementing um, risk management strategy as well into the session for the first time. Did some studying and some practice on that. So this is going to help us to make sure that if we lose a trade, we're risking no more than 2% of our overall capital. Then we'll get to that. So let's get started. We're going to be implementing the G.S.A strategy. So the 1 hour time frame, we're going to figure out what is the overall trend. And so really when I look at in this swing low, really to this swing high, price has really been trending up. We had a down move, the price continued to push up, still holding the swing low, previous swing highs are being broken. So I would say that price is overall bullish at this point. So we are going to draw a trend line here. Now the next thing we're going to do is we're going to turn on a CC trend indicator and see if it agrees. Looks like prices, real level trend lines are leveled out, probably because of this big down move. And it's probably up at some point. So we'll still say it's overall bullish at this point just because of that. So now that we figured out for the 1 hour time frame, we're going to go to our smaller time frame and we're going to figure out what is the current trend. So when we look here, you can clearly see from this swing low really to this swing high, price has clearly been trending downward. Previous lows are being broken. So we can say that prices overall are currently bearish. So I'm going to take a trend line, draw it down, and then we're going to erase this trend line because we're looking at the current price. Okay. Now we're going to look, we're going to turn on the CC trend indicator to see if that defines it. If it does, all these gray lines are coming downward. So that's good. For now, the very next thing that we're going to do is we are going to draw trading ranges. So trading ranges is the range from the most recent swing low to the most recent swing high or vice versa. So what we like to look for is we like to look at the most recent swing low, which we see it here. We also like to look at the most recent breaker structure, which we see that price was swinging here, and then it broke this. And then the most recent swing high we really see is up here. So we're going to go ahead and mark those. And the recent swing low, you can see is here. Probably very rapidly. Price we definitely say it multiple times. But at this point, we could say that price is in or was trading in. All right. Let's say a bear is trading in. I don't know why people are erasing this. There we go. So this is the our swing low. The swing high. This is our focus structure. Okay. Now, since we're in the bearish trading range, and actually, let me kind of zoom in and price a little bit more like this. So now that we're in the bearish trading range, we're going to swing our Fibonacci from the most recent high to the most recent low so we can figure out our pullback point. Right. So as you can see, prices already pulled back around the 60% area and then pulled back on the 50%. Usually price pulls back to the 50% area, sometimes it pulls back to the 70 to the 80%. So that's typically how the pullbacks work with the market. So given that, you can pretty much expect price to really come up to this area. So we're going to make this our sell zone. And then I'm going to stretch the sell zone anywhere from here to here. Now, what we want to look at is we're looking for price to really pull back to the 57% area. If it breaks this previous structure here, then you might change your bias and um, uh, look for trades going to the upside. So in this case, when we look at the overall structure of the market, we see that it's overall bearish. So we're looking for counter trend buys and retest sells. Now, if price breaks this previous truck structure, then that's when you start looking for counter trend sells and retest buys to the upside. Right? That's just FYI. But in this case, we might be, so this case, we're really looking for price to really, if it breaks this structure, then it might be ready to go up, but really it's this structure here that I'm looking at. So you're looking at current market structure. So let's erase this Fibonacci here. Now we're going to turn on the cheat code indicator to see if everything matches up. And as we can see here, it matches up pretty good. We see that a lower bullet advantage here. The price could do a counter trend buy and a retest sell up to here. Have to test this previous structure and then push back. So that's something to really keep in mind. So what we're going to do is push this out. So we're going to wait for the 9:30 candle to close, the 9:15 candle to close. Then we're going to move on to the next step. So we have about less than 7 minutes for that. So I will be right back. All right, so we have less than 10 seconds before the 9:30 candle closes. So since we're in the overall bearish market, I'm planning on doing an overall sell position. Okay. Now what I'm going to do is I'm going to set my stop loss to where you're only risking pretty much 2% of the overall capital. So I'm going to actually push it down to 136, 137. Okay. So that way it gives price a little bit of time to kind of swing out a little bit once we feel like we have a solid entry. That way, if price hits our stop loss, we only risk 2% of our account in that stop. So if price goes our direction, then we'll focus on getting. At this point, this is 1,000 points for the buys. So I'm going to go ahead and hit the scene. Go ahead and set the alert. Now, keep in mind as well, when the 929 candle hits and the 930 candle hits, we will adjust according to where price is at and where it's moving. We will adjust this risk to reward tool. So that way we can actually match this with current price where it's at. So that way when price, if you feel that price is going down a direction, we can execute the trade right literally at where current price is at. So that's what we're going to do. So we'll probably more likely do that at 828, maybe I'm sorry, maybe 927. So we can see what current price is at and then adjust our stop loss and everything. See what current price is at, and then we'll place in stop loss and take profit and just hold it. And then when we feel like price is going our direction, clearly by watching price action, then we'll execute the trade and make sure that our trade is within our risk management plan. So we have about maybe 9 minutes or so, probably about 9 minutes, maybe 9 minutes until 927 closes. So I will be right back. All right, so it's 927. So I did adjust this risk to reward tool just quite a bit. So I did test this out in one of my demos and put in the stop loss and take profit. And our 137 point stop loss here should equal about $80 in loss if it goes against us, which is well within our 2%. So what I'm going to do at this point is I'm going to go ahead and paste in a stop loss and take profit. That way price ends up going our direction, we'll be ready for it. If it ends up going against us, then at least we'll be managing our risk. So we're going to focus on price action and wait for the price to clearly go our direction before we even execute the trade. I'm just going to put in the stop loss and take profit just to be ready. And now everything is in. So we have about a little bit over a minute. We have about a little bit over a minute before the 930 candle closes. So what we're going to do is we're going to strictly focus on price action. We're going to be looking at the current structure. If price breaks this structure, we might change our bias, but if it breaks this previous structure, no, actually this previous structure, then we definitely might need to change our bias. So that's what we really need to look at. So it's 829 now. So again, if it breaks this structure, we might need to really start looking to change our bias. If it breaks this structure, we definitely need to be changing our bias. And we'll see what happens. We have about less than 40 seconds here. That price pushing that. So we're going to really watch this price action. Pushing, maybe out of the way, maybe. Let's get and the 930 candle has closed. We got a 2-point sell there. Was past this structure technically, so they could really sit on their hands and wait. But now we need to see if it's going to really bust through this structure or is it going to retest and go around. I'm going to actually just move this all the way up to here, entry up to this structure right here. Now, if the bus past that structure, then we're gonna have to probably redo our risk reward. Really busting that, it's like, but we gotta see, I'm gonna wait for the next penny to see if it's gonna close above this. Because we don't wanna get into like breakout. Yeah, we got to do with the push or something like that. Yeah, like that. And let's wait and see. So we're starting to get down to this area. I'm gonna wait for the next candle. That's what I'm gonna do. Let's see, we'll look at this area. Yeah, we do that. Yes, so, one thing I forgot to do is put our rules here, put our confirmation, so let me do that. Let me change it, the price of the data to make. The first confirmation I see here is that we got a cheap code sell. The prices are going to HMO and we had a huge spike. The price might be ready to maybe pick this structure. So we got a cheap code sell, but we're gonna need some more confirmation on that. So let's wait and see. Wait to the next candle. We got a little bit over 11 minutes from that. But this big week is 10%. Okay, I'm gonna need to know that if you get for this structure. I was gonna see something. That's something really quick here. But, uh, let's see. Then I'm gonna wait until the 9:45 candle. So it's really pushing up now. Breaking this structure. But now we got a high spike here. We have a high spike. So prices above the HMA, it broke through this structure. So now the question is it going to really respect this structure up here and start to sell down, or is it going to close above and continue to buy up? Now, if it continues to buy up, we might need to change our bias. This will really buy up, so but we got to really wait. So it looks like it might be rejecting this structure here. This structure here. So the first confirmation is the high spike arrow here. So we need to pay attention to that. So if we get a two-quote sell or two-quote buy, the price starts to really push down. Then we might have a little something. But once the 8:45, 9:45 candle closes, then pretty much I'm going to move my risk reward as close as I can to current price. And then just keep it for that. And then set the trade. Once we put our price stand after that. We have a little bit over 6 minutes for that. It's really, it looks like it's really rejecting this structure. And that's what I'm paying attention to that. So we're going to keep our history reward tool in this area. And what we're going to do is we're just going to watch price action. And if the next candle start reverses and it starts to push down and continue to push down, then we're probably going to execute the trade because worst case scenario, the price just hits our stop loss in this trade within our 2% risk management system. But that's what I'm going to, that's what I'm planning on doing. So, a little bit over 4 minutes before the 9:35 candle closes. Rather than post in the stop loss and take profit, this place price hits that direction and it starts to back, it will be ready to back. If not, then you'll have to invest it first. That stuff actually take part and paste it in. So we're just gonna wait for another 3 minutes to see what the next thing does. It's gonna be really, really, really effective for someone that think that they've got it. That is a challenge, that's the appropriate. At this point, that's what we're looking at. So, 3 minutes now. So we have a little bit over 1 minute. So we'll see if the next candidate is ready to do. Three, two, one. Let's see what this next candidate does of giving us a cheat code cell. There's some strong structure here. So we got another high spike arrow here as well, and we got a cheat code cell. So we might, so I'm gonna hold it and we'll see what it does. They're fluctuating. Bunch good pushes out of the shell. And it's putting in the structure here. Still a big amount. And then parts is gonna play around with it. And I'm not really executing yet. I'm not really yet. I need to change your bias to a buy, but we'll see. I might have to wait for the next candle to do a buy, but yeah, I'm gonna have to wait for the next candle if I'm going to consider buying. That's what I'm like to do. Let's see. That's why I gotta take a bio here. A lot of fluctuation. But a little bit over 7 minutes before the 10 o'clock candle closes. Probably the way to see what that was going to do. Prices are buying up, and I'm waiting to see what the next candle going to do first. It looks like we're breaking the previous structure here. Let me see. Yeah, I'm definitely not wait for the next candle, but I'm not gonna do anything yet. Price starts actually going down again. And I might just redo my risk reward to put everything in and then go all in. And then I see the next candle's going to officially break the structure and go up, and I might go back down. But prices over block, that's the biggest thing. Yeah. This is where we're gonna put our new tree here. The price, the size is switch over. So they get sick. We got a little bit over 3 minutes before, you know, it's kind of close. Let's see what it does. We got a high spike there already. So, so that's what I'm really looking at. So we might get the price bump destruction. We might get a strong penetration side down to the structure, maybe. Close it down and feel it back down up here. We got a little bit over 2 minutes. Let's see the 10 o'clock candle blast. So we have a little bit over a minute now before the 10 o'clock candle closes. So we have about 20 seconds now. Right, the 10 o'clock candle's closing now. Price is overbought. So I'm very sketchy about buying up in this area. So that's why I'm not going to buy it. It's not going to do it. Put it up to yeah, 2, 7. The prices overbought. I really don't want to buy up in here. I'm not gonna do it. The price is really, really overbought. It might be won't be going bullish, but I don't want to take the chance of being buy and then all of a sudden the eventually go down. I'm sticking with my words. Now they're waiting until the 10-15 candle. They would walk around there and jump in. This might have been a fake move to trick everybody. Probably what this says. But let's see. You know, just telling me a lie here. Don't lie. What's the buy up? I don't feel comfortable buying up in here because of all this stuff, so we may be overall bullish. Now, we can start looking for counter sales and retest buys because we can broke all this previous structure. That it's going to have to be a retest sell if you all that. I'm not just going to jump into the buy. It may surge all the way up past the structure and hit it, but eventually it's going to reverse over. That's why I never get caught into it. It's a nice buy, but still. About to wait until the next candle. Let's buy up for. But there's finding this in this area. That's what I'm looking at. You'll see this here. It's overbought this point. Excuse me. We have less than 2 minutes before the 10:15 candle closes. We got a minute left. Let's see what this next candle does, guys. Next candle is closing. We got another spike of 203, 20405, 7, 203, 253. But we'll see if it starts to drop itself. It will. Let me just look it up here. Except for everything. 204, 2, they're pushing up. We were really bullish today, which is fine. But it's resistance, we got a high spike there. That's what I'm looking at. So, price is overbought. Now buying up in the same. Be a different story if we was further down here, then I would have bought up. But in this case, no, I don't trust it. That's why I'm holding my hands. And they can buy up all the way up here and do what they want, but it can still reverse up on it. You know, I feel comfortable about making other ones every day. You definitely need to be looking for penetrating cells and retest bonds at this point. If you get a retest cell, probably come out of this structure and then probably push that on. Probably go all through the structure. There's only minutes until 10:30 and it closes. There's a possibility this might have been a huge fine trail, maybe. But that's what I'm going to the next pending. You want to keep spiking along. If we get it to dial a confirmation self and it's getting that. All right, guys, I'm gonna go ahead and take the sell. Let's see if we made a good decision here. The thing is, we have our stop loss set to where if we hit our stop loss, we'll risk $88, which is 2% of our account. So we're good to go there. So let's see what price does. Let's see if we get this trade, guys. Remember, when we take trades, so we got a sell signal up here. So this is good. Whenever we take trades and only risking 2% of our account or less, then you get to go with protecting your capital. Excuse me. And we are officially in a sell now. Blood pressure dropping, folks. But remember, we have our risk management in place. Telling you dropping. Let's see what we can get, guys. Let's see what we can get. Okay? You know the job. Like the next team is going to be closing as well. Forgot about that. I'm sitting waiting for the next pin to go, but I'm not going to go about it. 4, 3, 2, 1. $some profit, it really dropped. Boom. We want to trade today, guys. This was our RC session, so uh let me document my results and I'll share them with you. Be right back. Now I start documenting my results. So we did a good job of number one, following our rules. So let's go over that. The price dropped here. We had two confirmations. Number one, we had two high arrow spikes. And then we also had a sell signal. So we built at least two of our confirmations and we looked at the overall market structure. We knew that price was overall bullish at this point because it broke previous structure, but we knew we were going to get a counter trend sell and then a retest buy. So price might come down to this structure and this structure and buy that. So that's how we won this trade. We also put our risk management in place to where price did go the other direction. We only risked literally 2% of our account on the spot. Not only we want to trade and follow our rules, but we also put proper risk management in place just in case the price still went the opposite direction from what we did there. So you can see that price sold and we won this trade. So let me go ahead and share the results with you guys and then we'll wrap this up. You can see we're inside the Trade Locker app. Let's go to our closed positions here. And for today, we made $92. So now if you look at our overall, we are $48 in the green now. It's phenomenal. So now this is the reason why managing all this is important. Because as you can see, in my previous loss Friday, I stayed well below my 2% of my account. Okay. So that gave me the opportunity to trade another day and not only make up for that loss, but then also be in the green. That's why risking no more than 2% of your account is important. And that's the reason why I'm going to start implementing putting my stop loss at the proper place each session. Okay. And that's the reason why I set my stop loss. I showed you guys at 137. But when price went against our direction, we would have hit exactly $88 and we would have been done. That we won this trade. So price went, see, we got in here, we got out of here, so we probably got to make that at least 300 points caught. The price went a total of maybe 700 plus points. So we won this trade. So that's it for this session, guys, and I'll see you guys tomorrow. Take care. Bye.